Hello, this is Brett Rentmeester, President of Windrock Wealth Management. Today we are thrilled to have a special guest with us who is one of the foremost experts on trend forecasting and someone whose work we follow very closely. Our guest is Gerald Celente, publisher of the TrendsJournal, quarterly publication focusing on global economics, geopolitics, and a range of other topics, which can be found at www.trendsjournal.com. Gerald has boldly forecast many of the biggest economic events and trends over the last 25 years, while the mainstream media continues to be blindsided by these unfolding events. Gerald, thank you for being with us today.
Well, thanks for having me, Brett.
Just by way of background, we founded Windrock Wealth Management on the belief that the economic path ahead would be one of the most difficult investors have seen, and one where conventional stock and bond portfolios would fail to protect investors. And we saw almost nobody else in the wealth management industry talking about, much less addressing, the issues we're going to discuss today. Not only is the mainstream missing the bigger storyline unfolding, but they've consistently missed prior financial bubbles, falling back on common defenses like markets are efficient and no one could see it coming. So given this mainstream belief that you can't see things coming, I'd like to begin by quoting your winter 2014 Trends Journal, where you stated, "Forecasting trends requires knowledge of the past and understanding of the present in order to anticipate the future." Gerald, please take us through your perspective on the art of trend forecasting and why the mainstream media always seems to miss the mark.
Whether it's in economics or geopolitics, social change, environmental, you name it, they miss the mark because most of the time, as I see it, they have a stake in the game. So if we're going to talk about the media, who's it owned by? A handful of companies. So it's basically an oligarchy, but we call it the communications media. And they're selling product. And they're selling the belief that you should do what they tell you and you'll live a better life. That's the subline under it all, that they know best, they have the best experts. But again, whether it's in economics, look what's going on now with the Iraq War. And again, we'd forecast it would happen exactly the way it is happening and unfolding before it began. I did an op-ed piece for all of Gannett News outlining that the United States would have a swift battlefield victory that would devolve into a civil war, and Americans would leave after they've lost too many men, too much money, or the will to keep fighting. Here we are, but now they're bringing back the same experts that didn't see it coming, saying what they should do next. And I'm bringing that up because whether it's in the economy, geopolitics, as I said, you name the field, everybody that's commenting on it usually has a stake in the game. And I'm a political atheist. I look at things the way they are, not the way I want them to be. I'm not an optimist or a pessimist. Those are values. You could be the greatest optimist in the world. And let's say your name is Dr. Brett. And a patient comes into you, and you see that this person only has a few, they're rotting away of cancer or whatever. Optimism doesn't play a part in that. Facts do. So we only look at the facts that are available, and we try to get them from as many divergent sources and disparate sources as possible. And then we put them together, and we look at it socially, economically, and politically. All things are connected. So when you talk about in the beginning in your introduction about, wealth management, and then you start putting the pieces together. Let's just look at the news. Oh, I didn't know this. Central banks have invested nearly $30 trillion in the equity markets. I wonder why. It couldn't be because those interest rates in here zero, but now you have negative interest rates in Europe, in the ECB. So where are they going to put their money? And then they write that the IMF is now forecasting that the United States economy is not going to grow at nearly the 3% rate this year as they had forecast, but a 2% rate. And, quote, the economy is stalled. Excuse me, the economy has lost momentum. It never had momentum. All it had was cheap money. But nobody wants to call it what it is because they all have a stake in the game. And they want the Ponzi scheme to keep going, so they could keep reaping the riches. It's never been like this before. The interest rates are unprecedented in recorded history. No one has ever seen this before. So are they going to say it's going to end ugly? No.
And speaking of ending ugly, I'd also like to take you back in time a bit to what you were saying leading up to the last collapse in '08. And really, as early as '04, you started talking about, in fact, these are your words, the Great Recession, as it would become known by 2007, will maintain its grip for at least a generation. So you identified it early, and then kind of on the eve of the collapse, before anything had happened in December of '07, you warned of the panic of '08, failing banks, busted brokerages, toppled corporate giants. Whatever the spark, the stage is set for panic in the streets. Gerald, these comments are like reading an article looking back at '08, and in fact, they were your projections before '08. What did you see leading up to '08 that got you so concerned?
Well, what happened was that people forget the dot-com bubble burst in March of 2000. And again, we had forecast that as well in October of 1999. We called it dot-com bust. We said it would break by the second quarter of 2000. What convinced us that we saw that the whole e-commerce world was much smaller than they were pretending it to be. And we knew it was going to break apart because you had these scams going on with no business plans, no models, people not making money, and the market just booming, the dot-com market. So then, you have what? March of 2000, April, May, June, July, August, September. That's 6 months. And then you had 9 months after that, 9/11. People forget the United States was in a severe recession. When George Bush, on September 8th, a poll came out. He only had, remember, he was just elected, he just took office in January. Now it's September. His approval rating was only 51%. The country was going down really fast. And 9/11 happened. They started to lower interest rates to 46-year lows. And they reinflated the bubble before it had a real chance to deflate. And they call this capitalism, and it's not. The merger of state and corporate powers, by definition, according to Mussolini, is called fascism. Too big to fail, there's no such thing in capitalism. Bailing out financial institutions, car companies, favored friends, that's fascism. It's the merger of state and corporate powers. It's not a revolving door of politics and government and corporations. It's corporations are in charge. Look where the money comes from. And look at what the senators and congressmen get it from. This guy, Eric Cantor. He reminded me of those old enough to remember Eddie Haskell on Leave It to Beaver. The guy with the brown noser who knew nothing. And you see where he got all his dough from. And you see the people's reaction to it. They're fed up with it. And that's why he lost. I mean, it was a big secret. He lost because he's a lying little jerk. That's a flunky for the financiers. So you can see it all happening, but nobody wanted to call it what it was. So then when they started raising interest rates, they had to, just like they're going to have to do it again, that's when we knew the bubble was going to pop. And you could pick up the Financial Times this week, and you will see the stories about all of the borrowing going on, the mergers and acquisitions, and the bundling of all of these exotic financial instruments that are reminiscent to the crash of 2008, the panic of 2008. They're doing it again. And you know what line they use to justify it? This time there are safeguards in place. What am I, 6 years old? Who are you BSing? Tell this to your Economics 101 course, professor. Don't tell me. But that's what they keep saying. There's no protection out there. They're doing the same gambling. All this is criminality. It's gambling. And no one wants to call it what it is. They're not investment banks. They're casinos that gamble. So when we saw this happening, it was very clear, and you can see it happening again. This thing is going to collapse when interest rates go up. It's an interest rate recovery, period, paragraph. And if you don't believe me, ask the $30 trillion that the central banks, including China, have invested in the financial sector, because they can't get it. They can't get any return on their money any other way.
Yeah, and it's really a